Terms drift quietly mid-year. I spoke with a mid-market staffing operator who did not feel like anything was broken. The business was growing, orders were steady, customers were asking for more people, and the company was invoicing serious volume every month. From the outside, it looked controlled. But when he looked closer at the cash cycle, the pressure was starting to show, not all at once, quietly. A few customers who used to pay inside normal terms started stretching. A few invoices that used to clear cleanly began drifting later. And by mid year, the business was still doing the work, still paying the employees, still servicing the accounts, but the cash was coming back slower than before. That is what I call mid market term drift. It is not always one bad customer, it is not always a crisis. Sometimes it is just 10 days here, 12 days there, and suddenly the payroll cycle is carrying more weight than it was built to carry. Here was the issue. The firm had roughly $1.5 million in weekly payroll going out. Before certain customer invoices tied to that labor were collecting close to 60 days later, that timing gap changes the business because in staffing, payroll does not drift. Payroll is due every week. Employees get paid on schedule. Clients get terms, and the operator carries the space in between. The owner realized the risk was not that demand had disappeared. The risk was that customer payment behavior had shifted and the company's cash flow structure had not adjusted with it. So he empowered himself with an invoice factoring line of credit. Now, when eligible client invoices are submitted, those invoices can convert into working capital instead of sitting through the full customer payment cycle. That gave him a strategic cash flow mechanism to support payroll, protect service levels, and keep growth from being slowed by delayed collections. For mid-market staffing operators, here's the question worth asking. If your best customers started paying 10 or 15 days slower this quarter, would your payroll capacity still support the business? Or would term drift start making growth decisions for you? Because in staffing, the danger is not always a lost client. Sometimes it is a good client paying just slow enough to tighten the entire operation.